Hey, I wanted to go live this afternoon on an article that was recently published by CNBC. It's an article around interest rates. And as we've seen interest rates go up to some of the highest levels of the year, let alone in the last 10 years, Fannie Mae came out with a big notice on this. They're saying mortgage rates will fall. They anticipate them falling to 4.5% in 2023. And so the expectations with this, and the article's in here, and I'll put this in the description, but I thought this was worth talking about because what's happening is as interest rates push up, we're getting an inverted yield curve, which could mean that we're going into a recession, and all the numbers are looking like we're going into a recession, even though they haven't really officially said that we are. What will happen is as we inch closer to a recession and we get inflation under control, rates will come back down. So people we watch and listen to are also talking about interest rates coming down. But what does that mean for people buying a house? So I wanted to show you a live situation we just ran for a client that we're helping in about they're looking between $450,000 to $500,000 price point. And what we did was we broke down an option at $450,000 and $500,000. And then this was a 5% down, primary residence, good credit, kind of a, basic situation here. But we said, okay, well, what happened at $500,000 if you refinanced in 2 years? We did a very modest increase of appreciation of 4%. So not like the 20% we've had recently, but just a modest appreciation. So price went from 500 to 540 in 2 years, let's say, and you refinanced it. So you'd pay the loan down a little bit and then refinance it in 2 years. I didn't go as far as the article from Fannie Mae saying of 4.5. I just ran with 5% down and wanted to show what that would look like if you rolled all the costs into the loan amount. And so paid nothing out of pocket for the refinance. And what would that do to your payment? So the payment would drop by over $300, almost $400 a month. So drop from about $3,450 to about $3,071. And that's including tax and insurance. So I've broken down estimated tax and insurance. And I didn't even anticipate dropping mortgage insurance off. So maybe the savings is even higher in 2 years, but this is a very modest look at it. Obviously, this is a fixed loan too. So God forbid rates keep going up, then the client is safe in their fixed rate. And the difference now with a lot of their mortgage products is we actually have to qualify and do what's called the ability to repay test. So people that are qualifying for this and this client, they have to qualify for the payments. So even if something happened and to that, they know they're not in an interest only or some balloon payment or some stated loan program. So I just wanted to get this out to you. This is something we do for clients, and I just wanted to shoot a quick live video because it was on my mind. If you need anything, any reviews with this, or if anybody else needs any reviews like this, we'd be honored to help. So let us know. Again, thanks so much for watching, everybody. I know this was just a quick video, but I think this is helpful discussion around what it looks like if you refinance or what happens in the couple years heading down the road. A lot of people are a little hesitant. I shouldn't say a lot of people. Some people are hesitant about the rates, but I think this is a good opportunity to buy because what we saw in the last 6 to 18 months, people were panic buying and they were overpaying significantly just to feel warm and fuzzy that they got that 3% rate. But now what happens is you can actually negotiate on a deal, get seller credits to buy down the rate. That's a whole nother strategy we can go over. But this is something that we can work with this market. If you're selling a house or buying a house, it just makes it so much easier to be able to negotiate with our sellers and our buyers and put a deal together. So again, thanks for watching. Have an awesome day. Let me know if you have any questions. You feel free to give us a call or text 480-553-8770. Thanks.